Welcome to the Delaware Mortgage Weekly Rate Update. I'm John Thomas from Primary Residential Mortgage, here to give you your update. Last week we saw several housing-related reports were released last week. Both housing starts and building permits came in meeting expectations. Existing home sales, though, actually fell 0.9% in February to 4.59 million. New home sales fell also by 1.6% in February, which was below expectations. So all the news is showing housing is struggling along. The Feds, I've also noticed that the rates ticked up, which is also not good for housing. So they're now discussing the possibility of QE3, which is Feds purchasing bonds. When they buy bonds, that can help home loan rates. And their goal is to keep home loan rates low until the housing market can recover. Another thing that may help bonds improve down the road is the problem in Europe was not solved. They did solve a problem or kick it down the road for Greece, but we've got Portugal up next. Portugal's economy is set to contract by 3.3%, which means they won't be able to pay or service their debt or meet the obligations of the European Union. So that'll be in the news. When that comes up, we could see that hurting the world stock market, which means investors will go to bonds, which could help home loan rates, but that is not in the short term. In the housing news itself, which is depressing the housing, is we still have 1.4 million homes in the foreclosure process and another 2 million homes that are 90 days or more delinquent on the mortgage. And then we also have 11 million homeowners that are currently underwater. In order to solve this problem, what we need to do is get the government and the banks to get these foreclosures through the process as fast as possible. It would, in the short term, hurt home prices, but in the long term, it's going to help the recovery much quicker than dragging this process out. And it's just kind of like a slow death when they do that. Okay. Other news, we've seen the bond market. If we look at the bond page, we can see that the bond has been on an elevator step down, which means the bond prices have been making lower lows and lower highs. So as the bond sells off and the price of the bonds drop, we've seen home loan rates over the last 2.5 weeks go up. And the trend is to keep going up unless the bonds can get off this trading pattern of stepping down, which you can see in the picture. You can see they've stepped down each week, and the trend is to keep stepping down. So we'll see if there's anything that can get us off this down-stepping trend. If we can, then that'll see home loan rates improve. If not, the outlook is that they'll still slowly tick up. And I do recommend locking your rate in now, as the long-term outlook is that the rates will keep drifting upwards. In the local news, we do have a free first-time homebuyer seminar coming up in Newark on Saturday, April 21st. That's at the Christiana Hilton from 10 a.m. to noon, or again from 1 to 3. You can register by calling 302-703-0727, or you can register online, DelawareHomeBuyerSeminar.com. Then we also have one in Dover, which is Tuesday, April 24th from 6:30 to 8:30. It's at Dover Sheraton. Again, you can register by calling or by online, DelawareHomeBuyerSeminar.com. Well, that's pretty much it for the Delaware Mortgage Rate Weekly Update. Again, I do recommend locking in your Delaware mortgage interest rate as rates are sliding upwards, and the trend is to keep moving upwards. If you need help or would like to apply for a loan, give us a call in the office, 302-703-0727, or you can apply online, PRMIDelaware.com. And see you next week.